Many traders prefer to work intraday, following the trend's movement, and the reason for such preference is clear. This still can bring good profits in the shortest period, allowing for dozens of trades per day. However, the risk in this case are also quite high. A completely different approach is often guided by the Navigator strategy. It is aimed at filtering out the maximum market noise and leaving only precise signals for trade answering. Navigator enables catching price peaks and making accurate forecasts about its further movements. So hello everyone, you're on my channel, Polly the Trader. I'm Polly and I'm a trader. I strive to create interesting videos about trading, how to earn, how to work, and I teach all about indicators and patterns. So subscribe to my channel. I'll be very happy and it will be beneficial for you too. So any price movement sooner or later concludes, followed by its corrections or reversal. This axiom forms the basic for many market trading strategies. The Navigator strategy is based on finding that point of the trend reversal. The essence lies in the fact that the market is dynamic, and any trend has its conclusion. Navigator defines this movement, as the market eventually undergoes correction. Navigator is another effective strategy for trading binary options, based on predicting the reversal of the current market trend. An important advantage of this method is the ability to work successfully on short-term timeframes. Many traders operating on 5 minutes intervals demonstrate quite respectable performance. Principles of trading with a Navigator strategy. Price movement changes can signify either a minor pause or a beginning on the powerful trend in the opposite direction. In any case, the main task of a trade is to determine the moment when this will happen. The decision is complicated by the fact that the trend can end almost at any time. To use the strategy, you can directly open a live price chart to identify points where a strong impulsive movement fades. Popular trend oscillators like RSI and CCI are employed. RSI is one of the oldest technical indicators for determining the strength of the current price movement. It displays the price minimum or a certain period, allowing the calculation of the trend change moment. CCI also belongs to the category of classic indicators. It is specifically designated to track price fluctuation within a certain range. It is accurately demonstrates price oscillator cycles, thus enabling a clear identification of the end and start of any market trend. This shows when assets enters the area of potential overbought and oversold conditions. The relative strength index and commodity channel index complement each other excellently, maintaining the accuracy of their indicators. Before commencing work with a Navigator strategy, it will be necessary to adjust the CCI control levels to the boundaries of 200 plus 200 or minus 200. This strategy works best on time frames starting from 5 minutes. The strategy is built upon a defined points of the current trends fading dead and the emergence of a new one. The tools used for this purpose, RSI and CCI, enable the trader to detect that trend, sell, transition, and the overbought or oversold territory, providing information for precise forecasts. For RSI, the upper zone is when the price exceeds the range of 70 to 100. For CCI, with our settings, it's about 200. Conversely, our result for RSI is when the price falls into the zone of 0 to 30. For CCI, it's correspondingly below -200. Interpreting the indicator readings should not pose any difficulties. A risk price peak is the overbought down signals and options to buy with a forecast of price decline. Conversely, reaching price peak is the oversold down provides a basis to buy an option with a forecast of price increase. The expiration period is calculated using the 5 levels rule, the time frame on the chart multiplied by 5. The expiration period of 5 minutes time frame is 25 minutes. And if you are working on a 30-minute time frame, the expiration will be 150 minutes. And during the RSI trading during a downtrend, and thus purchasing an up option. It is aware that these moments should mark the occurrence of a reversal. When traders make a common mistake, it consists on initiating their trades and borderline moments. Here, it's necessary to wait for both indicators to reach critical ranges. Reaching the overbought down with the indicators in turn signal that the trader should buy a binary option for decrease. So, let's test how well the Navigator strategy works in a real market. This is the out and Japanese yen currency pair, and I'm opening a 5-minute upward trade for $1,000. Now, let's see why I opened it. The first thing that we notice here is the support zone, but it doesn't interest me. The second point is the CCI is the RSI long. Thirdly, RSI is also in the RSI zone at a level of 27. CCI, on the other hand, is at a level of minus 181, which means both indicators are in the RSI zone. And right now, they are both reversing and starting the move back towards natural readings. Constantly, the price is also moving upwards, so it's logical to enter for an increase. This is how many intraday traders operate. They follow the current trend, trading along with it. The Navigator strategy is designed to filter out market noise and provide precise signals to trade entry. As a result, the Navigator allows capturing price extremes, predicting reversal points, and forecasting further movement. It relies two indicators, RSI with the standard settings and CCI with the levels of 2 plus, 200 and minus 200. The RSI period is also set at 20 candles. RSI is one of the oldest technical indicators for determining the strength of the current price movement. It shows the price minimum over specific time intervals and allows the calculation of trend change moments. CCI, let's say, it is a more classical indicator. It is especially created to track price fluctuation within a certain range, and it accurately displays price cycles and oscillations to allow clear identification of boundaries on the start of any market trend. From experience, I can say that the Navigator strategy works best on 1 minute and 5 minute time frames. It is really upon identifying the point of the current trends, fading the emergence of the new one. The indicator RSI and CCI allow this to be achieved. They help detect the transition of the trend into the overbought and oversold zone, from where the price is likely to reverse in the opposite direction. And of course, I believe you do not understand how the Navigator strategy works. And as you can see, the price has already exited the oversold region and is rapidly moving upwards. The trade was profitable almost from the beginning, and now it's probably around 25-30 pips in the positive. Let me reiterate the entry conditions for trade. If CCI is the overbought zone, meaning about the price 200 level, and the RSI is also in the overbought zone, meaning about the 70 level, you should enter for a decrease. In the reverse conditions, when CCI is an oversold zone below the minus 200 level and RSI is also in the oversold zone below the 30 level, you should enter for an increase. In general, the stronger the oversold or overbought conditions, the stronger the signal and the higher the probability of profit. And now, let's wait for a minute until the trade is closed. Only 1 second remains and our trade closes in the positive. As you can see, the strategy predicts quick correction after impulses quite well. Although the price retraced during this time, I still made a profit. I've been here with you, and I trust that I'm confident that concepts in an understandable manner and that showcase their particular implementation make the most of all depth and science shared of this platform. I offer only actionable guidance. Don't forget to subscribe to my YouTube channel so you won't miss out on new video releases. And thank you so much for your attention. Goodbye.